let's get across to some important market voices. Bala Devina joins in right now, first on the show, and we'll get you a lot of other voices as well. But Bala, thank you so much for taking the time out. I know buying the dips is the age-old adage. The question is, with what's happening in the US Treasury yields, with what's happened to the OPEC situation, is it difficult to say that this is the bottom?
Yeah, I think, Neeraj, while it's always difficult to find the bottom, at the same time, the fall in the oil price that has come as a surprise in the weekend, and also the oil dynamics completely is changing more towards 30 to 40 kind of range. That's something that's turning out to be positive for India from a broader perspective. And having said that, I think this fall off yesterday's in UAE, as well as the likely fall in Dow Jones, back on the back of oil price, has one impact in Indian market. And the way I think sharp fall has come, and as you rightly mentioned earlier, that the market has been falling, and despite that, the market has fallen one of the sharpest fall that we have seen today. It essentially makes it in somewhat of an opportunity to buy, either on a stock specific basis or on an index level itself. So that is where I see it. But having said that, yes, with oil price dropping, one doesn't know actually how the escalation will happen to the global credit spreads, and we will see credit default swaps going up in the global space. If that happens, and if it becomes quite severe, then it could have an impact on the credit market in general in the developed market, which could potentially have an impact on the equity market as well from sentiment point of view. And secondly, oil price being so low, if US shale gas goes out of business because their cost of producing is high, if that happens, then we may probably look for some kind of recessionary trend global market. That also may keep the sentiment low from a global market perspective and could have an impact on, in general, flows. But having said that, from oil price being so low, I think from India perspective, may be seen as an opportunity. Of course, the government also may have to step up their activities on few structural reforms in boosting the growth aspects in especially in auto sectors and few others. This current crisis can be converted an opportunity for India perspective.
Right. That's a very interesting point there, because, we still don't know how the credit markets are digesting this entire thing. And if that tends to spiral downwards, then this can be way out of hand. Bala, good afternoon to you. So, you hear many advices in such a period of time, whether or not it's the right time to start a systematic investment plan, put money in mutual funds, because these rates look extremely attractive. What kind of advice do you give out for investors who are sitting on idle cash?
Yeah, I think interestingly, since morning we've been discussing about this. Normally, whenever market falls or go up, we normally advocate SIP way of investing is the best way of investing in mutual funds. But having seen such a sharp fall, I think one must consider some lump sum investment. If somebody has got 100 rupees of investing, at least about 30-40 rupees can be considered as a lump sum investing rather than doing an SIP. And given the fact that the fall has been quite sharp, and then even the government of India can take few steps which can potentially convert this current crisis into an opportunity, and therefore we will probably see a gradual recovery coming back once the coronavirus settles down soon. So I think from an investing point of view, it's a high probability, or maybe it's a reasonably good advisable thing to have some bit of lump sum consideration also at the current level.
Right. So, Bala, do you feel that the RBI then has, there is a possibility of the RBI stepping in a little bit early to take some responsive measures to soothe the frayed nerves right now?
I think the way we see is the Reserve Bank of India has done enough things in terms of building liquidity and bringing stability in the currency market, as well as having introduced LTRO, which is the long-term repo. Plus also they are busy with the current S Bank resolution. While the recent fall in commodity prices make a case actually for at least a 50 basis point rate cut, I don't think they will do it immediately. They will probably look at doing this in the coming policy. Therefore, from a policy point of view, RBI should be more favorable both on the rates front as well as the liquidity front, which again in some sense should keep the overall sentiment alive. I think the bigger issue I think for us is actually the ETF flows, which has been primarily responsible for moving the market up. I think the ETF sell-off is also taking the market down, which I think in my view may not last for too long, and that I think should bring back some stability.
Bala, while obviously there are just too many risks at this point in time, but the fact that we were hoping for, bottoming out of the economy as well, that gets delayed, the recovery gets pushed back a little bit more. Do you feel in light of that then the pockets of consumption where people have started to put a little bit money in hopes of a recovery, that once again will start to fade away? Or you still find certain pockets attractive even at these levels?
No, I think while the slowdown is real, of course the hope was coming back with the various steps that the government was taking on one side, and second is good monsoon has been giving reasonably good rural output in terms of good harvest season. And while it was coming back, still there was some bit of hope to revive the auto sector in the form of introducing scrapping policy and so on and so forth. Maybe those, if it is introduced, maybe it can revive the growth. But of course, as you rightly pointed out, the growth is not coming back in a hurry. Even the consumption side, I think if the lenders become a little bit choosy on lending and they're not aggressive in terms of lending, naturally the credit growth contraction. One side you have deposit growth increase, other side there is a credit growth contraction. Then naturally it will not actually lead to an increase in demand growing, especially at this point of time when the whole sentiment is weak. Irrespective of interest rate being low, if there are no borrowers coming big time for borrowing, it will have an impact both on consumption as well as on banking sector growth.
All right. We'll leave it at that, Bala. Thank you so much for joining us with your views here. So according to Mr. A. Balasubramanian, because of the steepness and the pace of the drop, it actually is not a bad idea, neither